up guys, Graf back at it again with another investing video. In today's video we're going to be taking a look at my M1 Finance and Robinhood portfolios, and I'm going to show you all how they've been doing. But before I get started, I want to hit you all with a rap lyric. So back in 2007, Roscoe Dash and Soulja Boy came out with a song called All the Way Turned Up. Highly would recommend you all listen to it. But anyways, in that song Soulja Boy said, "If money was a sport, I'm MVP every year." So let's try to be like Soulja Boy, let's make money a sport, and let's be the MVP. With that out of the way, let's get it. Alright guys, so here we are in my Robinhood portfolio. So I've talked about this a little bit in some of the past videos, but I have switched over to a new investing strategy. So previously, I was just kind of doing some research, picking out stocks that I liked, and just kind of buying a couple shares here, a couple shares there. It wasn't necessarily a bad strategy, and it was a good way for me to learn some more about researching and picking individual stocks. But I started to find that I don't really have the time to thoroughly research a lot of these stocks as much as I would like to. So what I have been doing lately is I have been investing $100 every week. 70 of those dollars goes into VTI, which is the Vanguard Total Stock Market ETF. 20 of those dollars goes into VXUS, which is the Vanguard Total International Stock ETF. And then 10 of those dollars goes into the Vanguard Bond ETF. I don't think it's necessarily that important that you choose ETFs from Vanguard. I just really like Vanguard, and the ETFs that I found met my own personal investing goals. So I think for me, why I like this strategy is it's very simple. It gives me some diversification. I have 70% of my money invested into the US stocks. I have 20% of it invested in foreign stocks, and then 10% in the bond market. So I kind of like being diversified, but with 70% of my portfolio allocated to US stocks, I still think I have an appropriate level of risk for someone who is my age. So over this past week, I did, like I said, invest those $100, and I'll show you all how my portfolio has been doing. So this past trading day, I was up 0.67%. Over the past week, I pretty much broke even, finished the week down 0.02%. Over the past month, I'm up 3.31%. Over the past 3 months, still not doing too hot, down 20.84%. Over the past year, down 13.34%. And all time, I'm down a little over 4.5%. So not too upset with how this portfolio has gone. I guess when I started investing, I knew I was kind of towards the end of a bull market, and I was very aware of the potential that I could lose some money. I really haven't lost too much right now, and I'm pretty happy that I have about half my portfolio in cash at the moment. I really like dollar cost averaging, slowly adding to this US stock position, slowly adding to the foreign stock position, and slowly adding to the bond position as well. And I think the reason that I really like what I'm doing right now is it just keeps me very consistent, and it's a very simple and easy strategy to follow. I think a mistake that some new investors make is that they try to overcomplicate their strategy. They try to pick stocks. They come up with all these metrics that they think will make for a successful stock. And while some people have success with that, I think for the majority of investors, unless you have all day, every day that you can spend researching stocks, I would just take your money and put it in a ETF that tracks the Standard & Poor's 500. Take some of your money and put it into international stocks. There's ETFs that do that, like VXUS. And then take some of your money and put it into bonds. Depending on your age, you may want to allocate more money to bonds if you're a little older, a little closer to retirement. And if you're younger and have a long investment horizon, you may want to allocate more of your money to stocks or riskier investments. Keep in mind, I am not a financial advisor. This is just my own opinion. This is kind of the strategy that I follow. Do your own research before you make any sort of investments. So we'll look at how my some of the individual stocks that I have done. So we'll look at total return. So Waste Management is a stock that I really love. I would love to continue to pick up shares of it in the near future. I'm up about $78 on 9.6 shares, which is a 0.7% gain. A 0.7% gain on this past trading day. My total return is actually about 9%. So doing pretty well with that. Procter & Gamble, a very defensive stock. I am up 16.3% on that. Coca-Cola, another very defensive stock. I'm up 10.3%. Back when all this craziness started, I decided that I wanted to invest in some more defensive stocks. So I picked up some stocks like Procter & Gamble, Coca-Cola, Kraft Heinz, Johnson & Johnson. And those stocks have done really well for me. We'll look at Kraft Heinz. That one's up almost 29% in a matter of about a month, I believe. So very happy with that. Johnson & Johnson is another great performer for me, up about 23.5% in roughly a month. Not too long ago, I also picked up some Apple and some Microsoft. Apple's up 6.3% for me. Microsoft is up 5.7%. Two very large, very good companies, in my opinion. I actually created a couple videos a while back where I conducted analysis on Apple and Microsoft. And actually, while I was conducting that analysis, I liked them so much that I went ahead and bought some shares. As for my losers, Realty Income has not done too hot for me. I know everything that's been going on lately kind of affects tenants' ability to pay their rent, which is why Realty Income stock has dropped, I believe. I'm down about 14% on that. I'm not too upset. Realty Income pays a monthly dividend, a pretty nice monthly dividend at that. And I think they're a solid company, and I may try to pick up more shares here in the future. Outside of that, I don't have too much new news for you all. I don't even think I received any dividends this week. I'll go over here, sort by dividends. Haven't received any dividends recently. So now that we've covered my Robinhood portfolio, we'll go ahead and jump on into my M1 Finance portfolio. So here we are in my M1 Finance portfolio, and in last week's video, I pointed out how I simplified my portfolio. I used to hold over 100 stocks, or actually hold exactly 100 stocks, and I simplified that, cut it down to about 33 stocks. The reason I did this is it's easier to keep track of all my positions, keep track of how these companies are doing, and I also wanted to kind of diversify my portfolio a little bit more by sector. So I had a lot of diversification in that I owned 100 different companies, but I didn't have a whole lot of sector diversity. I picked a lot of those 100 companies based on their dividend yields, and a lot of those companies tended to be in the same sector, like real estate, investment trusts, or like oil and gas. I think I had quite a few oil and gas companies. So what I did is I went and looked at the 11 sectors of the Standard & Poor's 500, and I picked my 3 favorite companies in each sector, and those are the companies that I now hold in my portfolio. So looking at how this portfolio has done, over the past day, I finished up about 1%. Over the past week, I'm down 1.62%. Over the past month, I'm up 15.5%. Over the past quarter, I'm down 19.75%. And 1 year, which is going to be the same return as all time since I started this portfolio in July of 2019, I am down about 25%. So I kind of feel the same way about this portfolio as I do my Robinhood portfolio. I started investing into this knowing full well we could have a correction. I could lose a little bit of money, and I'm okay with it. I'm going to continue to fund this portfolio. I've been adding in $33 every week. I have recurring investing set up in M1 Finance, which is really nice. Every Thursday, it just goes ahead and takes $33 out of my bank account and puts it into M1 Finance. And then I pretty much invest $1 into every stock in my portfolio. So it's a very slow but very steady way of building positions in these stocks. And I think it's going to be something I am really glad that I did here in 5 years or 10 years or whatever it may be. So all time, I've received about $23.26 in dividends. This week is the first week in a long time that I don't think I've really received any dividends. Maybe this 8 cents from Medtronic. But the reason that is because I took the 100 companies I own and sold off a bunch of them. And like I said, I picked out those 33 stocks, and those are the ones I'm investing in now. So I purchased those shares about 3 or 4 weeks ago. So as those companies start to go ex-dividend, I may start to see some dividend payments. So now we're going to look at my best performing and worst performing stocks. Now keep in mind that I started this portfolio about 2 or 3 weeks ago, and M1 Finance has kind of a weird way of tracking the return that you have earned on your money. I'll include a link to it below. But so far, my best stocks in terms of total gain are Abbott Laboratories, United Health Group, and Johnson & Johnson. I know it says that I'm up like over 100% on each of these stocks, but I don't think that really accurately reflects how I've done investing in these companies. So now we'll look at my losers, my worst performing stocks. So Realty Income hasn't done too great for me, down about 2%. American Express hasn't done too well for me either, down about 3.12%. And then Brookfield Renewable Partners is down about 1.6%. So I'm really interested to see how this portfolio will do over the long term. I think it will probably track the Standard & Poor's 500 pretty closely because this portfolio is made up of some of the largest companies in America. It's certainly all companies that would be in the Standard & Poor's 500. And this portfolio is pretty diversified in terms of I have an equal number of stocks in each sector, and I invest an equal amount into each stock. So I really like how this portfolio is diversified. I don't think it's over diversified like my old portfolio was. But yeah, I think with that, I'm going to wrap up today's video. If you enjoyed watching it, please hit that like button down below. Please subscribe to the channel and keep your eye out. I've been putting out a lot of stock analysis videos. I've been going over the largest companies in America. It's been a really fun project, and I think they're pretty informative videos. So make sure you check those out, and take care, guys. JGraph out.